Don't use market orders when you trade small cap stocks. Use limit orders only or you're going to lose a lot of money. Look at this. This is POW 2020, bam, drops 10% at the close. What happened there? Somebody used a market order instead of a limit order. What does that mean? On a big stock like Google or Facebook, which are trillion-dollar companies, your buying or selling isn't going to move the stock price, but on these small cap companies, a couple of $1,000s could move the stock price. So, it's 22, somebody did a sell at the close, bam, dropped 10%. You don't want to be that guy, okay? Does that happen often? Sure. Look at this. 1 month. I can spot 3 times this month when it happened. Bam, there's a cheap one, there's a cheap one, and again today. So if you are selling, make sure you use a limit order, and if you are buying, make sure you use a limit order. How do you take advantage of foolish people doing things like this? I'm not saying that this is a good one or a bad one. I'm just using it as an example. Let's say that I wanted this company and I wanted to buy it at 18. I can put in a resting good till cancel limit order to buy at 18, and if it ever drops to that price, some sloppy seller, I'll get lucky. Just put a limit order, resting, good till canceled, and forget about it. Don't check it every day. One day you'll wake up and you'll have gotten lucky and taken advantage of somebody's foolishness. Or if you're looking to sell, let's say I own this and it trades all the time at 22, I could put in a resting sell order at 25 or 26. Might not get there, but you might get lucky. Here's a 1-year chart. Has it ever gone up that high? Sure. It's trading above 25, and this is callable at 25, so it should never have gotten to 27.20, but it did. So what does callable mean? That means that next year the company can say, give me your shares and I'll give you $25, whether you like it or not. So there's no reason that this should be trading for 27, right? Should be trading for less than that because they might take it away from you at 25, but it shouldn't be trading for more. But there's times that it is, and you can take advantage of that if you're patient and you use limit orders. So generally a company, when people are offering to buy and offering to sell, there's not much difference between the bid and the ask, but sometimes on a company like this you'll see here's a bid and there's no ask. So if you put a market order in, you might get some algorithm that will take your market order but at much higher than anyone else is willing to pay, and that's why you'll get something like this where you'll lose a lot of money. So and even if there is a bid and ask and the computer doesn't take the other side of you, on these smaller cap companies, this one's only 68 million. Sometimes you'll see a large difference between the bid and the ask. On a big company like Google, even though it's trading at $200 a share, there might be only 1 penny difference between the bid and the ask. What you'll see on the small company like this, the difference is people are offering to pay $6 a share for it and people are offering to sell at $6.15. So that's a huge difference. That's almost it's more than 20%. It's 20% difference between the people willing to buy or people willing to sell. So if you bought this at the market and you sold a second later because you realized you made a mistake, you would lose 20% of your money because of this huge bid and ask spread. And sometimes this bid and ask spread is so wide. So I mentioned this one that dropped 10% today at the close. This is Ammo Inc. Preferred. So if you'll notice here, somebody's offering it to buy at 20.15 and nobody's offering to sell. So what does that mean? That means if you put in a market order, you'll either get 20.15 or nothing. And if you put in a market order, there will be a computer on the other side who's not willing to buy now, and as this keeps bidding higher and higher and higher through the algorithm, maybe they'll take the other side and then try to resell it quickly. So you don't want to be taken advantage of by a computer. You don't want to be taken advantage of by people. So use a limit order, not a market order. When you enter in your order with your broker, you'll see different options: limit order, market, good till close. For these small caps, use limit orders. So that's about it for today. I have set up a Buy Me a Coffee. You'll see a link in the description if you want to donate. And just a reminder, this isn't trading advice. Think for yourself, make your own investing decisions. I'm not a financial advisor. I'm definitely not your financial advisor. So, this is just for entertainment and informational purposes only. And if you have any questions, put them in the comments, and good luck out there.